Real estate investing is all about building wealth, but the smart way. Real estate investing is one of the best ways to grow your wealth. Properties tend to appreciate over time. There's some positive impacts from a tax standpoint, and they can provide you some great monthly cash flow, as well as when you get out of them, you can get some good profits. But here's the key rule. Don't just buy property for the sake of tax benefits. There are some accountants out there, sure, they say, look, it's a great part of the strategy. But the real person investing in property should be about building wealth. Either that's through strong cash flow, capital growth, or ideally a bit of both. If you focus solely on tax savings, you might overlook the bigger picture and risk making poor investment decisions, or you might be making a decision for the wrong reason altogether. The risks of buying the wrong property, not every property is a winner. Buying the wrong one could cost you not only in terms of your money, but also years of your life due to the stress of getting out of that property or having to do a lot of repairs on it. Instead of moving forward, you could find yourself moving backwards from a financial situation. So the next key question as you're looking on this is, why are we talking about investing in Sydney? Is it worth it? Look, I focus on the Sydney real estate market, so it's a question I get asked often. Should you invest here if it's your first property? Look, there's no doubt about it that Sydney is expensive. You might think about buying in a more affordable area like Perth, Hobart, Brisbane, or even like Townsville or regional areas. While they can all seem tempting, there's a significant downside if you're not there to manage the property, if you're not living in the area, particularly with your first property. What if something breaks and needs your attention? You'll have to rely on the local property manager or tradespeople. And here's the catch. If they know you're out of town, then finding those reliable trades can be challenging. And quotes can often come in higher, or you might just have concern that they're actually a bit higher because they know you from out of town. They also know that you're not going to be able to inspect the property or the work itself. So managing from afar can quickly turn into a logistical nightmare, flying in and out and trying to check things off. So, what are the three types of properties to avoid in Sydney? Well, if you're set on buying in Sydney, let me save you some money and a few headaches by sharing three property types you should avoid as an investor. New builds or fully renovated properties. These might seem appealing because of the depreciation benefits. Again, there's that tax point. But they often come with hidden downsides. Builders and developers typically price these properties at a premium, aiming to maximize their profits. Fair play to them. It's like buying a brand new car. It starts losing value the moment you drive it off the lot. Plus, if something goes wrong, your tenants will be chasing you to fix it immediately, adding stress to your investment. And you're going to have to go back to the builder or the developer to try and sort these issues out. The second type of property that you should avoid, properties that are near unattractive features. Now, I'm not just talking about bad suburbs and paintbrushing that way. I'm specifically referring to things that could turn buyers off. Think maybe they're 3 doors down from a service station, you've got that petrol smell, or they're directly across from the school and there's that bell ringing all the time. While rental returns still might work in these areas, strong capital growth often relies upon being attractive to all type of buyers, both investors and owner-occupiers. So when you're going to sell, you need to make sure it's going to be attractive to them. Most people don't want to live next to a service station with the smell of petrol. Most people don't want to live across from a playground where the school bells ring 15 times a day.